What are multibagger stocks? How to find multibaggers before they explode. If you don't know what multibaggers are, you need to learn now, because multibaggers are what you should be aiming for in your stock portfolio. Lucky for you, that's the purpose of this video today. Well, the term multibagger was coined first by Peter Lynch in his book One Up on Wall Street, referring to stocks that return many times over the original investment. That is, more than 100%. Multibagger stocks is now a jargon in the Indian stock market that describes stock ideas that keep giving high returns in a relatively short time. One can consider these stocks to be the unicorns of the stock market, ideas that give more than 100% returns on their current value in a short time. In the next 10 minutes or so, we'll share what are multibagger stocks, why you would want to find them, and how to find multibagger stocks that will double in value for you. Before we start though, which stocks do you think will take off and double this year? Let us know in the comment section below. Now, let's jump right into it. Multibagger stocks are not a specific category of stocks, but instead describe the nature of the stocks that have great potential to raise funds for the company and grow exponentially, thereby providing greater returns each time. These stocks are not picked based on the nature of the company or its valuation. These stocks are often undervalued and grow in high-growth industries and emerging markets. They take a long time to show results, but as they start, the stocks become multibagger securities. There are many factors that determine what stocks may become multibaggers and what do not. And often these stocks are not the most mainstream ones either, though that can be likely. The price-earnings ratio, price-to-book ratio, and other parameters are indicative of the stock's potential, based on which investors can choose to invest in such stock while also assuming the related risk. Low-price stocks do not grow into multibaggers either. Some essential points to keep in mind while factoring on multibagger stocks are looking at its price-earnings ratio, its performance over the previous quarters, debt-to-equity ratio, and revenue multiples. Picking a stock, undervalued or at its current price, and reading why the stock is trading at that price can yield new findings in the stock's fundamentals. A stock that doubles in price is called 2-bagger, while if the price grows 10 times, it would be called a 10-bagger. Thus, multibaggers are stocks whose prices have risen multiple times in their initial investment values. It's worth noting that while multibaggers are obviously desirable and worth aiming for, they shouldn't become your primary focus. If you place the desire for enormous returns above your desire to find compelling, undervalued investments, your investments may not turn out as impressively as you had hoped. Remember that high returns are often correlated with high risks. A lottery jackpot offers an enormous return for your dollar ticket, but only with the near certainty that you won't win it. Similarly, chasing high-flying stocks carries the risk that some of those rockets will crash back to earth, perhaps even resulting in a total loss of your investment. If you've developed a successful investing approach, stick with it, refining it over time as you learn more through reading and experience. Be sure to employ a lot of patience too, and you'll probably accumulate some multibaggers. Patience is more critical to investing success than you might think. After all, if you love the idea of achieving a 10-bagger, that means you should think twice about selling out of a stock once it doubles or triples for you. But, well, you should consider selling if your confidence in the company's future is diminished or if it seems overvalued. But if the company's long-term prospects are still solid and still performing well, then hanging on is usually the best thing to do. It might seem challenging to find stocks that will become multibaggers for you, but it's not quite as hard as it seems, and you don't need to look only among high flyers to find them. Warren Buffett's Berkshire Hathaway, a conglomerate featuring a lot of insurance operations, is a great example, having exploded in value 167-fold over the past 30 years, making it a 167-bagger for some patient believers. Many future multibaggers are right under your nose, and they don't always look like multibaggers. Netflix has been a volatile 8-bagger over the past 5 years, and Walmart is a 10-bagger over the past 20 years, though it's only a 2-bagger over the past decade. Starbucks has been a 4-bagger over the past 5 years, and a 63-bagger over the past 20 years. See? Patience can pay off powerfully with the right stocks. Now, how can you identify multibagger stocks? Well, here are a few details to check. The debt level of the company should be within reasonable limits. There's no defined levels per se for debt, as it will vary from industry to industry. However, as a ballpark measure, debt should not be more than 30% of the equity value. Check on previous quarter performance. Keep a check on the company's revenue multiples on a quarter-by-quarter basis. If the multiples are low, but the company is performing at the operational level, then that can be a hint that the company has significant upside potential. Sources of earnings. Along with the revenue numbers, check the sources from which the company is making money. Is the primary revenue segment set to grow at the macro level? Are the operations of the company easily scalable? If yes, then the stock may have the potential to be a multibagger. Earnings and price multiples. Calculate the trailing 12-month earnings per share EPS and revenue to arrive at the current price earnings and price sales ratios. If the price earnings level is growing faster than the stock price, then its chances of being a multibagger are bright. Check out business model, structural, and management changes. Be on the lookout for any significant changes in the quarterly results or annual reports that could have a considerable impact on the company's operations. Additionally, look for a company with what Warren Buffett calls economic moat, or a competitive advantage preserved by a company to keep drawing in profits in the long term. The economic moat boosts the growth and profitability of the company over its competitors. This could be a significantly high market share, low-cost production, scalability, strong brand leadership, patents and intellectual property, research and development investments, solid distribution network, and no policy drawbacks. The act of buying stock has indeed become a simple exercise thanks to slickly made mobile apps. It's also true that if you're hoping to make long-term money from stocks, you should be buying financially sound, well-known companies. But it would be an extreme oversimplification to think that getting such basic stuff right is enough to earn multibagger returns from your stock portfolio. Unearthing multibaggers requires multi-year effort in knowing a business well before buying it and tracking it relentlessly while you own it. When the company enters a rough patch, you need to know whether to bail out immediately or hold on in expectation of better times. Even if you do all this, a stock may languish if Mr. Market fails to develop a fancy for it. When you look at lists of multibagger companies today, you may beat yourself up about why you couldn't foresee their business success that was so obvious 10 years ago. When buying into a business, it may not seem very different from its industry peers. But over time, it's companies that manage to build durable competitive advantage through their product mix, distribution reach, or customer relationships, driven by inspired leadership that ratchet up their return on equity, catches the market fancy, and deliver multibagger results. Multibagger stocks are known to increase your wealth manifold, as the returns on such investments are tremendous. However, investment in multibagger shares has to be kept in for a minimum amount of time to ensure extensive capital gains through turnover of funds to final products sold in the market. Funds obtained from listing shares in stock exchange are used for both research and development and production of a product, thereby effectively realizing high profits through massive sales volume. On the downside, multibagger stocks have to be purchased in bulk for the wealth creation of an individual. Therefore, the loss incurred by an individual would also be substantial in case they're caught in a market downturn. Many investors purchasing multibagger shares can get caught up in an economic bubble or value trap. Companies trading at high prices might reflect the creation of an asset bubble, wherein the product being manufactured is in high demand due to the underlying market conditions. This would lead to massive losses incurred by an individual when the bubble pops and the asset value spirals. Similarly, value traps are a rising possibility when it comes to multibagger stocks. Products manufactured by a company might seem like a profitable investment option in the present, but would lead to losses in the long term. Investors expect the prices of such shares to rise tremendously in the future. However, the situation does not arise, as the asset does not have any intrinsic value. Thus, investors need to carefully analyze the financial statements of a company and the prevailing situation in stock markets before investing in multibagger stocks. Today, everyone is looking to invest in multibagger stocks amid rising inflation and economic uncertainty. Market research suggests that over 15 million Americans actively used trading apps during the COVID-19 pandemic, most of them young amateur traders. The hyperactivity of retail investors has also been observed in Europe, India, and the Philippines, with buyers increasing their trading volume by 2 times the normal activity. Currently, some of the most notable multibagger stocks in the U.S., based on the stock price gains of the last 12 months, include Devon Energy Corporation, NVIDIA Corporation, and Ford Motor Company. Multibagger equities should be held for the shortest time possible to generate substantial financial gains. This isn't to say that these stocks are guaranteed to make money. They also include capital market risks, liquidity hazards, inflation concerns, and corporate risk, to name a few. While it may be tempting to seek multibagger stocks, investors should keep their investments in possible multibaggers to a minimum so that they don't negatively influence the whole portfolio in the event of a loss or insufficient returns. In summary, multibagger stocks, just like any investment, can be profitable. It for sure is, but this doesn't change the fact that the right decisions cannot be taken swiftly. One has to take all such rightful measures to identify which of the stocks are multibagger stocks. Stocks in the market are many, and so are low-price stocks, but they assuredly aren't multibagger stocks. You need to be efficient in the selection, and after a brief examination, you must select the potential multibagger stocks. After that, an investment can be made. Now that you understand more about multibagger stocks, are there any stocks you know of right now that could turn out to be multibaggers? Let us know in the comment section below.